And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80 bucks.
Going to be a problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
All right, everyone. Welcome back. Today we're going to be reacting to Gordon Johnson, hopefully put some insight into anything that he inquires about in regards to Tesla. Now, I don't want to turn this community toxic. I don't want any people saying that he's an idiot or anything of the sort in the comments. Keep it respectful, guys. You can have opposing views to us. That's totally fine. So long as it can be addressed and so long as the points are true, then I'll happily debate some of the points. That's not a problem whatsoever. For those that are new to the channel, I'm James, and I used to work in oil and gas as a geologist, studied for 4 years in geology and petroleum geology, and then I was contracted 2 years after that for the likes of Shell, Chevron, Exxon, you name it. So I've been there, I've actually worked in the industry. Today we're just going to be giving our thoughts on Gordon Johnson. This is all live, so this is just my straight up reaction. I haven't watched the video yet, so we'll see how it goes, right? Remember, be respectful, guys.
So which do you think it is?
I think it's probably a combination of both. We know those models haven't sold well, so I think that's a problem for them. But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem.
What might those be, though? Because when we're talking about a stock that's up so much there this year, people have been talking about the idea that demand has been strong, considering, you know, the delivery targets being shattered quarter after quarter for Elon Musk and co. I mean, it seems like things are moving in the right direction, but I know there are other critics out there that point to increasing competition, not just from the traditional automakers, but a lot of other ones out there, mainly NIO in China, maybe eating into the China growth story that's propelled this stock so much this year.
Right. So I think what's important is, look, we're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat. But think about this. Just over the weekend, we found out that Tesla is offering free supercharging for a full year if you buy a car made out of Fremont before the end of the year. That suggests they're trying to pull in demand. We found out last week they cut the price on their German inventory cars by 1,090 euro. That's a big price cut. They're trying to push through demand. And we know that Elon Musk, has cut the production, et cetera. And if you looked at China, right? So in China, people got excited about in October, the sales were about 12,000. In November, it looks like they jumped to about 21.5 thousand. We believe what enabled that was an 8% price cut at the beginning of October, which we really saw in November. But the problem is that price cut was enabled by them changing technology, LFP batteries, which are now being widely reported in China to only get 50% of the range in the winter and only get 50% of the range reported today in Europe in the winter in cold weather. So the problem is, potentially for Tesla, is are they going to be able to continue to sell that amount of cars in China now that people are seeing that the range is only half of what's promised?
So just on the topic of demand, now I apply a first principles approach to everything I do. I tend to just overlook the fluff and just go straight into the atoms of things. I've been in the showrooms these last few days. I was trying to test drive the Model S. Guess what? Close to the end of quarter, sold. Immediately was placed up on sale, sold within the day. Then I was meant to be test driving the Model X. Guess what? That sold almost instantly as well. So all of the testing performance vehicles were sold in the showroom that we've got locally here. In my eyes, I don't think there's a demand problem. It's more so, like Gordon says, I agree to an extent that it's a production constraint, because simply there's so much demand at the moment that they can't quite get out the production to level off with that. So there's a marginal disagreement on that front, but in my eyes, from what I've seen, the demand is there. The dealerships are selling at all-time highs. The Model 3 Performance, Model 3 Standard Range, Model S, Model X, you name it, they're all selling at hot pockets right now, from what I can see from my local showroom.
And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80 bucks.
Going to be a problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
Walk me through your thesis.
Right. The thesis is simple. Tesla's currently trading at about 200 times earnings, whereas on average, automakers trade around 6 times earnings. Tesla is seen as a technology company, but they don't have the technology that people think they have with respect to there's no there with respect to the batteries. And with respect to S&P inclusion, I think this is important. Since the S&P announced they were going to delay the inclusion about a month and a half ago, or they were going to include them about a month and a half ago, there's been about 1 billion shares traded. And prior to that, when they reported a profit in 2Q, there was 1 billion shares traded around that time. However, based on the S&P's own estimate, there's about 130 million shares that need to be purchased by indexed fund holders. So the point is, on that inclusion, you're going to potentially have a lot of shares that have been front run on this inclusion that are going to have to be sold. So you could have a significant sell-off on Friday or before Friday as some of that money that went into Tesla stock looking for inclusions comes off. Now, to your question of what our thesis is, listen, next year, right, Tesla has only been profitable 4 quarters out of their entire existence as a company since 2016, excluding credit revenues. These are government-funded revenues that Tesla gets. They weren't even profitable last quarter. Next quarter, for the most part, we believe those credit revenues significantly fall and in 2022 go away. The reason is because every automaker is now selling their own EVs. So if Tesla goes back into loss-making status, and when you add to that the fact that even the big jump in their Chinese revenues, their market share in China only went from 8% to 12.5%, October to November. The prior high this year was 25%. So they're losing market share in China, and their EU market share has fallen from about 33% in Q4 to around just above 10% right now. So in the markets where you have competition, they're losing share.
So there's a lot of things to actually direct our inquiries for here, and there's been quite a lot of inaccuracies from what Gordon has said so far. So he mentioned that the batteries, he said batteries so-so doesn't make it a tech company. There wasn't a lot of justification behind that, because if you actually look into it, they have the full self-driving package that's in the beta performance right now. Then afterwards, they've got the network which continually updates the Tesla vehicles. Like, in a sense, Dave Lee said something very interesting. He said that the Teslas are robots, because if you think about it, there's been Teslas bought in 2017, 2016, which because of these continual updates are getting even better. Their performance is even better than they were prior. This ability to kind of see everything and collect data from all the sensors, I'd argue it is a tech company. We're just talking about the automaker side of things. If I was to go into the software, if I was going into the possible robo-taxi fleet and kind of really nitpicking, I could get to the crux that, yeah, it is essentially a tech company. The next point, he mentions that the PE is through the roof. Now, PEs, when you're doing traditional fundamental analysis on a company, it's a tool that you can use, but it's never the be-all, end-all. You need to use everything else. You need to use the technicals, you need to use just inference and price predictions and possible market cap gain. Now, the idea that Tesla's overvalued, you can't really state that point. I've read a lot of bears say this, but it's a very simple thought, because a lot of the market cap that they're going to try to capture in the future doesn't currently exist. So how can you say that they're overvalued when you've got nothing to base your past information on? There is no other ride-sharing company. There is no automaker that manages to increase margins with software. Tesla ain't just an automaker. There's like 10 different startups within Tesla itself. It's a big conglomerate at this point. So that's another thing I want to address, that it's overvalued. You can't overvalue something that doesn't exist because you're using past data that isn't there. There is no blue market of ride-sharing networks, for instance. That's just one of the markets they want to get in. I could name another 5. So that's one thing I wanted to point out there. In terms, also, he stated earlier in this video that the battery loss in China is roughly 50% during the winter. Now, the lithium phosphate batteries themselves need to be warmed. That's how they operate. They need to be warmed. So when a Tesla is in a prolonged period of really cold weather, the performance of the vehicle is limited based on the batteries needing to be reheated. I suggest you guys watch Bearded Tesla. He shows his Tesla Model 3 performance being reheated in the winter. It has less performance, but I think Gordon's trying to compare Tesla's lithium phosphates to the other automakers. Guess what? They've got the exact same. They've got lithium phosphate. So to say that NIO or XPeng or Li Auto are better because they've got better batteries is completely false, because they use the exact same lithium phosphate. You know, it's an argument that's made redundant on that point. Another thing that kind of really just makes me confused is he just said that Tesla's losing market cap just after saying that they went from 8 to 12% in China. Now, last time I checked, 12 is higher than 8, so how can one be losing market cap? It doesn't make sense.
So as their growth slows, as their earnings turn back negative next year, we think there's going to be a significant sell-off in the shares. Institutional ownership right now, 41% roughly, nearly an all-time low. As people start to sell those shares and the retail money, which is driving the stock, starts to sell, we think there's going to be a swift downdrift in the stock. You've seen this before. I know it sounds crazy. Look at Tilray. Look at Sun Edison. Look at Suntech. Look at some of these stocks where they went from 5 to 300 back to 5. They went from 2 to 300 back to 0. It does happen, and we think Tesla is a prime candidate.
Okay, so this is another interesting point. The idea that there will be a massive sell-off in regards to the S&P inclusion. There isn't a single person on this planet that knows what's going to happen during the S&P inclusion, because it's a very simple concept. This has not ever happened in the history of the world. Since the stock market began, this has never happened. So the idea that one can predict this is fundamentally false. I even have to take a step back at a lot of the bulls because they expect a short squeeze, which is, in my eyes, quite logical. It makes a lot of sense. However, from my experience in the stock market, the market tends to react the opposite way that you think it will. However, it's one of these cases that fundamentally they have no choice but to buy the stock. And so the idea that Gordon's being bearish on is that the index makers have already pre-bought this Tesla stock for the inclusion. However, if you look at Rob Maurer's most recent video, it's proven that the three biggest indexes, the Vanguard and the other two, I can't remember their names, haven't actually bought the stock yet. And so it is possible that there's going to be a sell-off since there has been a massive runoff. There is usually a correction after a run-up. That's just 101. But this is one of those really unique situations that we've got to observe and take note of, because we're never going to see this again. Not again in our lives. I don't think people quite realize how incredible this is, especially the new guys who've joined the stock market. And it's one that's worth taking notes in case it happens again, which I highly doubt it will, but if it does, then you'll have an inkling of what's going to go on. But, you know, it could go up, could go down. I'm leaning more to the bullish side. I do think there's going to be a correction around about the 700 mark, but that's just my own personal opinion. That's not advice. That's just what I think. There is still demand to buy the Tesla stock. That's been proven from Rob Maurer's video. We're just going to leave that video off there. If you've enjoyed the video so far, thanks for tuning in. We've got a Discord linked below, got some incredible people there. We've got a lot of 7-figure portfolios all the way up to 1-share portfolios, and it doesn't matter because we're all part of the same community and we all contribute. Yeah, it doesn't matter how much your share count is. Everyone's really easygoing, and there's some super seasoned investors in this Discord group, and it's all for free. So feel free to check out the link below. Yeah, have a really nice day, guys. And if there's any other videos that you'd like me to commentate or react on, please link them below, and yeah, I'll react to them. Right, have a good day. See you later, guys. Bye.